Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Wednesday, December 6th, about 6 a.m. Central Time. Overnight, the precious metals are mixed after yesterday's sell-off. You have February gold up $3 at $20.39. March silver down 8 cents, $24.46. March copper up 2 at $3.81. And January platinum up 5 at $9.11. So there's really four things that are impacting these precious metals right now. There's not a ton of news flow coming out, at least geopolitically. And the focus is mainly on this labor data that's been coming out this week. In the meantime, I think because we had that explosive rally, gold and silver and other key commodities are all trying to find their footing technically. So you look at some of these main levels, like the 200-day moving average on gold sitting at 2005. The 200-day moving average on silver at 24.19. Now that takes the last 200 days into account, comes up with an average price on the slope of whichever direction that the metal was trading at, and it kind of finds this happy medium. And I think that's where the metals are going right now. They're going to try and find their footing as they kind of catch their breath and look at the bigger picture. Now there's two main things that I'm watching here. One is the interest rate cut expectations. They're jumping across the globe. Where in Europe, traders are expecting 625 basis point cuts. In the US, we're expecting 325 basis point cuts. This is all in 2024. And then the Bank of England, they're expecting 3 interest rate cuts as well. The timing of these cuts is what is critical, because you see these expectations jump for the ECB to make these dramatic cuts, and their cuts are expected to start in May. That's why the euro currency is beginning to sell off. It has a 57% inverse relationship to the dollar index, and the dollar is getting its boost. That also acts as a headwind against general commodities, commodity exports, and the inverse relationship with the gold market. So you look at the U.S., we're not expected to make those interest rate cuts, the first one until May. And then also the Bank of England is in June. But if you get the ECB making aggressive cuts right out the gate, and Jerome Powell holds off or delays it forward, remember they were late to rate hike. They rate hiked aggressively. What's not to say that they don't push out this rate cut and then end up cutting 50 basis points farther down. That'll push gold and silver and other key commodities a bit lower than where you would expect them to fall, say something like 1950 on gold. Now, I think once the party gets going on the interest rate cuts, I think that's when prices really take off, and we see something like a retest of this all-time high on gold. We see $2,300 on gold. We see $30 on silver. Now, the silver, the wild card there, and also the copper market is China. China's been trying to cut rates. They've been trying to do everything, prop up their property sector. They're getting their credit rating is under fire right now. So China's got a lot of problems. If they could get through with it, and I think that they'll have a better 2024. That's where that demand picture really comes in. On the copper market, I do believe that left tail side risk is limited. So I think that the mining operations are really the ones in control, almost like OPEC with a cartel with oil prices, which is really failing on doing their job right now. I think that copper is a similar situation where you could see coordinated efforts to curb some of that production. And remember, silver is a byproduct of copper mining explorations. So if you look at the outside markets here, they're mixed. You've got crude oil down 50 cents, 71.73. I think we're going to start bottoming out there. On the dollar index, it's up 4 basis points at 104 right now. You've got the 2-year treasury up 2 basis points, 452. And then you look at the equity markets, they're a bit higher from where we're at. Volatility. I think a lot of algos are trading these markets here at the moment. So, you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.